Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Jonathan Ferro, along with Lisa Abramowitz and Anne-Marie Hordern. Join us each day for insight from the best in markets, economics and geopolitics. From our global headquarters in New York City, we are live on Bloomberg Television weekday mornings from 6 to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.
Yardeni of Yardeni Research writing the data since the last meeting of the FOMC suggests the 50 basis point cut that occurred was probably too much, too soon. That raises the risk that price inflation might stop moderating and that stock prices might continue to melt up. Ed joined us now for more. Ed, welcome to the program, sir. Let's start with the stock market. Are you calling this a melt up?
I think it has been a bit of a melt-up. I mean, look, we're looking at valuation multiples that are getting right up there, close to where we were right before the tech wreck in the late 1990s. We saw a melt-up that got the forward PE of the S&P 500 up to 25. Now we're at 22, so it's starting to look like it.
Ed, we're seeing bond yields back up as well, higher again this morning by 2 basis points at 426. Can we sort of fold the election into this conversation as well? Do you think the election and a GOP sweep potentially would open the way to a move back towards 5% on a 10-year?
Unfortunately, it is a conceivable scenario. The bond vigilantes are definitely mounting up. I mean, the low bond yield a few weeks ago was 3.65%. And now we're at 4.26%. I think overnight we got to 4.285%. I think there's a possibility here that if we get a sweep, either the Democrats or the Republicans, the bond market will conclude that nothing will stop either party from spending a lot, maybe cutting taxes a lot for some folks, not for others. And all in all, continuing to widen the deficit and the debt. Meanwhile, the interest payments continue to accumulate and will probably hit $1 trillion, which will make lots of headlines within the next few months.
And I have to say, it's a very compelling argument to me. And I worry about the deficit, and I watch the bond auctions, and I see the increasing size. And last week, I was in Washington, D.C. with all of these international central bankers and these international bankers. And where do all of their clients want to put their money? Even with all these concerns, they're talking about the U.S. election, the deficit, the United States. They still want to come here. So what is going to make people say, no mas, we're done?
Well, that's a good point. I mean, the reality is that the dollar's actually strengthened at the same time as the bond yield has gone up. So that suggests that people are concluding that if the bond vigilantes are getting the message out to the Fed that they don't want any more rate cuts, that they think it was premature, that strengthens the dollar, which means that people are buying these bonds. So I wouldn't get too excited about the bond yield going up to 5%, but it's certainly looking more realistic than it did a few weeks ago. And a few weeks ago, we thought that the Fed did cut prematurely, that the economy was going to surprise them to the upside, and that's exactly what's happened.
There's also been a contradiction here. People used to think that higher bond yields would excise a pretty big tax on equity valuations. What we've seen is this melt-up continuing despite the melt-up in yields.
Yes.
What we have seen, though, is a change with that rotation being challenged into small caps and into the other 493 stocks. Do you think that is what this is going to look like into year-end?
Yeah, well, I think if, in fact, the market is starting to perceive that the Fed isn't going to ease as much as they thought after the 50 basis point cut on September 18th, then I think the market starts to cool off to the idea that the Russell 2000 is going to outperform and go back to the S&P 500 and maybe even go back to just 7 of those stocks, the so-called Magnificent Seven. And look, to John's point, I don't want to get too worried about a melt-up here on a valuation basis if it turns out to be an earnings-led melt-up. We certainly have had Tesla, for example. Maybe it wasn't so much earnings as hype, but as you folks point out, this is going to be a busy week for earnings. And we could have some upside surprises from the Magnificent Seven, which would drive the NASDAQ to further record highs, even in the face of bond yields going up.
Ed, I want to get back to where you see bond yields going, because you say that we could get higher yields regardless if it's a Republican or Democrat sweep. But when you look at how the Senate races are looking to go, it looks like you can pretty much take the Dem sweep off the table. If there's going to be a sweep, it's likely going to be red. So tell us a little bit more what that could mean, not just to yield short terms and long terms, but also other assets.
Well, it gets as confusing as Trump's policies are confusing. The idea of raising tariffs across the board by 20% and against China 60% is probably a bargaining position. I mean, it's hard to imagine that this administration would get advice from its own economists saying that that would be a good idea, because it certainly would be inflationary. So bargaining chip for the deal maker, Trump, would make sense. But as a realistic alternative to taxes and incomes, that doesn't make that much sense. On the other hand, Trump wants to produce more oil, which would be disinflationary for the U.S. But there's no discussion by either candidate about doing anything to reduce the deficits, to deal with the debt, to deal with the exploding net interest expense of the government. So I think the bond reaction to a sweep, as I said, by either side, I want to be balanced about this, but you're right, the sweep is looking increasingly, if it's going to happen, it would happen with Trump winning because of what you said about the Senate and the House. And in that scenario, the bond yield, I think, easily goes to 4.5%.
Ed, take us through what can happen if this election drags on or if it's contested.
I don't even want to think about that possibility. The country is so partisan that, we've been kind of driving ourselves mad here with the political partisanship, and to have a closely contested election would be very unsettling to the bond market, to the stock market, to all of us, I think. It would be resolved. Obviously, at some point, we will have a president. But if it takes months, it could mean that the rest of the year will not be a great one for the financial markets.
That is the market nightmare very few want to see. Ed, thank you, sir. Ed Yardeni of Yardeni Research. Strengthening heading into the final week of the U.S. election as traders weigh the economic impact of both candidates. McCormick of TD writing, we have painted the election as a binary event with massive tail risks on either side. The data currently favours the dollar regardless of who wins, suggesting to buy dollar dips into 2025, even if Harris wins. Mark joins us now for more. Mark, welcome to the programme. Let's just look ahead to next week. Give us the best case outcome for the US dollar and give us the worst case outcome for the US dollar. Which one's which?
Well, like I said, it's a binary event with like two large tail risks on either side. So obviously the most bullish for the dollar is a red wave, largely again because number one, you get tariffs immediately on day one as soon as Trump takes over. The second thing is you can have fiscal support and deregulation and all the things that are great ingredients that are cocktails for outperformance in U.S. equities. And I'd say on the other side, the thing that kind of confuses the market the most, or is probably the most bearish for the dollar, is a blue wave, but it's probably the most unlikely scenario. Betting markets have it about 10%, largely, again, because what you could do is you undermine the equity market. I think the most important thing to think about for this election is the number one thing that's been driving the currency market is not rate differentials, it's equity market performance.
With that in mind then, Mark, what do you think is actually outperforming already and pricing in the election outcome? Because a lot of people in the equity market are looking to financials and saying that maybe that's a lean to a Trump win, and maybe that's overdone, and maybe we get a reversal of that through next week. Do you see any sign of that taking place in FX with that in mind?
Well, I think one component, it's been really interesting. We talked about this a lot this entire year. There's really no macro theme that's driving markets. Like for the first start of the year, we talked about inflation. Then we talked about growth. Now we're talking about inflation again. Probably because we forgot to talk about inflation for a little while. So the number one factor that we see that is kind of underscoring what's driving market performance is mean reversion expressed through positioning. So I would highlight that through the move that we saw recently in the dollar was basically short on our positioning models. So we had we had a perfect storm of U.S. data outperforming the rest of the world, which has actually been happening through most of the summer, but the market's woken up to it. We've also seen, again, the Fed took a huge risk by cutting 50 basis points. And now we're starting to see that backlash a little bit. And also, again, the positioning was built into a single narrative, which was only about the slowdown in the U.S. economy. And now all these things have come back to markets. They were positioned incorrectly. Data dependence leaves us, again, very focused on a month or 6 weeks of data that basically, in turn, catches markets off guard when the pendulum swings too far in the other direction. So I think a big piece of this right now is that the dollar looks fundamentally positive. Data is doing better than what we're seeing in Europe and China. And I know markets are very focused on the China stimulus package, but to me, the China stimulus package is a second half of 2025 story that things are going to get worse before they get better. So again, the key theme here is that the macro situation is evolving into what is a more bullish fundamental story for the dollar, regardless of who wins.
Some people who are skeptical of the dollar point to gold, and they say gold's been a moonshot because people are worried about the dollar and worried about the idea of people having faith that this truly can be the reserve currency, not necessarily next year, the year after, but say in 10, 20 years. Do you look at gold, given the fact that it's almost doubled in price since the beginning of over the past 5 years? If you take a look at that, does that make you at all concerned about this dollar call?
It doesn't. I think what's interesting is, again, you have to think about what are the assets that people want to hold in an environment where there's geopolitical uncertainty. We're dealing with, in my opinion, structurally higher inflation than what we saw before the pandemic. In a world where what are your bigger risks towards a recession or higher inflation? And I think in that environment, more people are focused on hard assets, and those hard assets provide a decent hedge relative to, say, fixed income. So I think if you were to think about what's my asset allocation mix, it's still you want to be long U.S. equities, which gives you an exposure to the U.S. dollar. If you think about even an asset allocation mix, what we talked about in our election piece for next year is, yes, Asia has the ability to grow their economy. They have savings that they've exported to the rest of the world. Europe does not have the ability to grow its economies. We talked about this morning, I've heard in prior pieces, but France is spending too much, Germany doesn't spend enough. And again, if you think about the Draghi report, everything that's been coming out of Europe is focused on the industrial audio sector, which is something that there's a reason why there's tariffs being put in these sectors. And there's a reason why China is the world's largest exporter of automobiles right now. So if you think about the growth in the equity and all these stories, the U.S. equity market still offers probably the best risk-adjusted performance relative to other classes. We could see a rotation to Asian equities where currencies are undervalued, but that still leaves Europe somewhere far behind everywhere else. And gold is still an asset you want to hold on to because what we're seeing is coordinated fiscal and monetary policy with inflation above target.
Mark, we've got to leave it there. Appreciate it, sir. Just got some breaking news on Boeing here. Mark McCormick there of TD. Just over a week until Election Day. Bloomberg reporting more registered Republicans have already voted in Arizona, Nevada and North Carolina. They're Democrats. Henrietta Treyz of Veda Partners writing, it is distinctly possible that a victor is named in the 2024 election by Wednesday. If not, the worst-case scenario pandemic year-level disruption suggests developments could come through Friday and possibly Saturday, as was the case in 2020. Henrietta joins us now for more. So, Henrietta, let's get to your base case. Do we get a 2016 or a 2020?
I think we're looking more at 2016. I think a lot of the disparities, discrepancies, any concerns at the local and county level amongst the electors, they're fully staffed. They have gone through the 2022 midterm elections. They've gone through all these lawsuits. I think all the T's are crossed and the I's are dotted, and we will have an outcome on Wednesday. I'm optimistic.
Henrietta, but what do you make of Maricopa County election officials saying it could take anywhere from 10 to 13 days?
Yeah, they're definitely preparing us for the worst, but I believe Arizona and Nevada in particular were uniquely sort of embarrassed by the way the 2020 election took so long to call. And a lot of that disruption came from the occupant of the White House. So I think that this time around, they will be very diligent and careful about how they're reporting. And then hopefully we won't have to depend on just one state to decide or to know who wins the election. Maybe in the House, for sure. I think it'll take all week to get a solution, but I'm hopeful that the rest of the country will give us a decisive solution.
A theme that I've been hearing from sources a lot on both sides, that Democrats are actually running a very good ground game, especially in these swing states. But you're actually seeing, and so are we, a lot of Republicans are going out and voting early. Are they catching up to that ground game?
It's the ground game right now in the pull forward vote is incredible. In a number of states, including Nevada, there are double the amount of election day Republicans from 2020 voting early this cycle. So this message that you saw on the big Jumbotron at MSG last night was vote early. The Republican Party across various swing states, including Pennsylvania and Georgia as well, have spent millions of dollars trying to educate their voters to vote early, vote in person. Democrats still predominantly vote early in mail-in ballots. So we're waiting for that data, for example, out of Clark County in Nevada to catch up. But what we're going to need and what Democrats will need going forward is to see what the turnout is on Election Day. And in particular this week, this is a week where a lot of the younger voters turn out early if they're going to vote. Mostly right now, it's rural, white, older voters who are turning out, which is a disproportionately Republican demographic.
Henrietta, we know that once you go out and vote early, then whether Kamala Harris or Donald Trump, you could focus on some of those margins potentially to get out then on Election Day. And you say this all comes down to the suburbs. Who wins the suburbs? Yeah, that is the game. In 2016, Hillary Clinton lost the suburbs. And I think it was only by about 2 points, but it was enough to lose the entire election. This is your suburbs outside of Philadelphia, outside of Pittsburgh, key portions of Michigan and Wisconsin. In 2020, Joe Biden narrowly won them back, again, by, I think, 2 points. So he was able to claw back those suburban voters. Kamala Harris currently leads nationally with suburban voters by 6 points. So we spend a lot of time talking about the youth Latino and youth male vote. Obviously, they'll be but a part of the conversation is we're talking about Puerto Rico being a floating pile of garbage and things like that. But that is what turns off the suburban married voter. And they disproportionately vote in elections. And they have been the clincher for either candidate in the last 2 cycles and probably will be again in this 3rd cycle. They're voting more than they did in 2020, while cities and urban dwellers are voting less and rural voters are voting more than they did in 2020. So it's the suburban vote that is integral and critical to this election right now.
So if you push that forward, Henrietta, are you saying that Kamala Harris has more support than the polls are giving her?
Kamala Harris has more support with voters who matter more, again, because they vote more. They're a larger demographic, and they are the ones that are persuadable more than anything else. You know, you've lost the cities, that those voters are going to Democrats, and you've lost the rurals. Those voters are going hard to Donald Trump. It's the voters in the middle and suburbia that are swinging back and forth between 2016 being pro-Trump and then 2020 decided they didn't like what they had gotten for the last 4 years. And now under Kamala Harris, running at the top of the ticket, they have swung pretty substantially in her direction and away from Donald Trump. And their turnout is what's going to be the biggest bang for your buck population-wise to split these states.
It's pretty controversial, Henrietta, what you're saying, based on the polling that we've seen and just sort of the momentum and what we've seen in betting markets, which have given Donald Trump the clear lead. Where are people wrong in their analysis? Is it just the suburban voter, or is there something else in terms of what the deciding factors really are?
Well, I spent all week last week with investors up in New York, and I would say that the street is even more bullish on Trump winning than the predictive markets are. Last I checked, predictive markets were at like 61% that Trump would win. I'd say on the street, it's more like 70%. So there is this high degree of conviction, and the early voting data out of Nevada is painting a very bleak picture for Democrats. So there's reason to be excited. Unfortunately, it's just too early to get fully on board the Trump train and put your bets on the market right now in a way that suggests that there is no time for change. There is a whole another week of early voting in most states, and then obviously we have Election Day where turnout is going to be the name of the game. So I think that the street is picking up accurately on the state of Nevada, but that's not the story that the rest of the nation is telling us yet. It could be, but it's pretty early.
Henrietta, we spoke to a guest this morning that said for the business world, for the tech titans, the writing might be on the wall. Let's talk about some of the tech titans. After the assassination attempt on Donald Trump back in the summer, we had an interview. We spoke to the Meta CEO, Mark Zuckerberg, who referred to that as being badass. And then we saw Jeff Bezos' Washington Post over the weekend fail to endorse a candidate. Some people suggesting that maybe it's because Bezos was worried about an incoming Trump administration. And then we heard on the Rogan podcast that the Alphabet CEO had given the former president a call as well to congratulate him on his campaign event at McDonald's and what a hit it was on Google. What do you think that they sense is coming from the Republican leadership that might affect them?
That's a great question. I mean, you're going to have antitrust on the docket next year. We have a massive tax bill that we have to write. The tariffs are also going to be a concern. Not just that, but export control restrictions, inbound and outbound investment restrictions. I think all those pieces are really integral. But the reality is there's a $5 trillion tax bill that we're going to be writing next year. And all these corporations, particularly any that are multinational, have a lot of skin in the game on this one. So it makes sense to try to make sure you have bridges mended with everybody potentially that could win. I think there should be a lot of focus on the House members and the House races. Those are pretty predominantly in coastal states this year. So New York and California. If I were those tech titans and I was trying to really influence the outcome of the election, I'd focus on the House members just as much as the White House.
Henrietta, appreciate your views and your perspective. The analysis there from Henrietta Treyz of Veda Partners.
This is the Bloomberg Surveillance Podcast, bringing you the best in markets, economics and geopolitics. You can watch the show live on Bloomberg TV weekday mornings from 6 a.m. to 9 a.m. Eastern. Subscribe to the podcast on Apple, Spotify or anywhere else you listen. And as always, on the Bloomberg Terminal and the Bloomberg Business app.